If you are 50 plus, earning above a threshold, 2026 changes may yank away your favorite tax break. Today on Financial Fast Track with Tod Long.
You are moments away from finally getting the inside track on finance.
You've saved, you've done all the preparation, but when it's time to execute, you have to shift from preparing to performing.
This is the Financial Fast Track with Tod Long.
What we're going to do is take the guesswork out of financial planning for you.
Making more momentum with your money.
The reason we call it Financial Fast Track is Todd's a runner. There's no two ways about it. He had a career in sprinting, running, and just not only from the collegiate level, but also in the professional level. That's impressive. Hey, I used to get paid to run, Tod.
Yeah, I that subject comes up, I would say probably 4 times a week outside of you, right?
Okay.
Somebody will either well, I'm on YouTube too, but
Yes.
do some research
Google
on
search,
Google search, right, and find out I was like, you have a Wikipedia. It's like, well, yeah, I didn't do it, but yeah, there's a Wikipedia out there. It has my stats and whatnot. So that'll be a subject of conversation quite a bit from a lot of folks.
Well, I think that's fun. People like to know who you are. And it takes a lot to be an athlete at that level. So maybe it's a trust issue. People like that, don't you think?
You're right. I think it does. And it adds credibility. And
There you go.
I'm a real person.
Yes.
That kind of thing. Yeah. I do stuff outside of this, have done stuff outside of this.
Mm-hmm.
And, it's the makeup of why I do what I do now. But actually.
Right. Well, that's why you call the show. You named the show yourself, Financial Fast Track with Tod Long. I'm Jackie Selby. Did I say that part? And I try to help Tod get through this whole radio thing. And we talk about some interesting points, and we have some fun stuff to talk about today. Also to do with you, Tod. By the way, it's Tod with 1 D, Tod Long. I like to get that out there. So now they're going to go Google you.
Yeah. If you build, I think there's some other Tod Todd Longs out there, but I'm the only one that's Tod Tod Long. Mm-hmm. And as a matter of fact, when I was being raised, I thought Tod with 1 D was the only Tod with 1 D out there in the world. But turns out there's a whole community of us.
Oh, well then.
Yeah, there is. Interesting.
Ah, that's fun to know. Well, along those lines, my name is Selby, right? Selby. And my whole life, people call me Shelby, like the car.
Yeah.
Okay, Miss Shelby. I go, no, there's no H in there for heaven's sake. So I get it.
Right. I think I probably mispronounced your name initially out of the gates myself.
That's
not
okay.
to you. Yeah, not to you though. It was probably the Bruce, or I just misread it when I look at your email.
Well, I think that people from Texas, from the OKC, there must have been somebody famous. Maybe, who was it that was named Shelby? Somebody from, I don't know, history. Anyway.
Yeah, I don't know that either. Yeah, you're talking. I don't know. I know Oklahoma history, like it's what I had to do in school, but other than that, I'm spent. I know a lot more sports than I do.
I was going to say you're a sportsman,
yeah,
and a finance man. So why don't we talk about? Let's do this. Why don't we talk about what's going on with you and your practice and your clients and what you know this week?
Yeah, absolutely. So, last week, we'll kind of double click on this week. We talked some about 401ks, mm-hmm. and I got a call who wanted the Financial Fast Track review, and I did that. The part of it is the fee assessment and risk assessment portion, and said I was going through that, and we started to talk about her old 401k that she had. The story goes, she had a 401k. I think initially it was about $1.8 million, something like that.
Was she high up in management or something? That's a lot.
Yeah, well, she's a pilot.
Oh, she's a pilot. How interesting.
So yeah, she was the breadwinner in that household.
Okay.
But the thing is, she got divorced.
Oh.
And guess what? If you're the breadwinner, who's getting 50%? So this was completely reversed in what you probably traditionally see,
right,
in America, or probably in the world, that the husband is the breadwinner, and he if he's getting divorced, and guess what? He's got to give up 50% of his assets. She had to, and so that included houses and toys but it included financial stuff. And one of the financial pieces was that 401k. So the 401k got cut in half. And so this was, I think she told me 7 years ago or something like that.
Okay.
So a while ago, you would think that over that time it would have recovered. But when I saw the statement just a few days ago, it was only $1 million in that account. So 1.7, $850,000 out of it.
Okay.
goes down to $850,000, and 7 years later, it's $1 million.
So that's not, I mean, it sounds juicy to me, but what you're saying is it's only made a little
It's
bit of
only
money.
made exactly for 7 years. It's only made about $166,000
In
which is
7
roughly
years?
and that's roughly about $26,000 a year.
Shouldn't it have doubled, I feel like?
Yeah, you would think that. And so, but the thing is, if it's a 401k that's in the market. Now, granted, when she did this, she was still in the accumulation bucket, right?
right.
So you get accumulation bucket, you have the preservation bucket, then you have the distribution bucket. That's kind of the road your retirement money goes on.
All right.
And a journey, I should say. And so now at 51, I was cautious. I was like, well, you probably shouldn't be in any kind of aggressive types of accounts. So that's how we look at the risk assessment. Let's find out where you're at. And turns out she was in an aggressive portfolio, and it had lost money. And the reason why she didn't really look at it is because, I'm still working. I'm not going to look at it. They know what they're doing. Fees are maybe coming in and out of the account, all these different things that are happening. If you don't pay attention, then guess what? Things can be happening in your account in a negative way. And it turns out hers had not made a lot of money. I think this year it made some money, but historically speaking, with the ups and downs of the market, obviously, COVID hit and whatnot, all kinds of different things happened after 2018, 2019, whenever. Yeah. And so all that affected her retirement. And that was the bulk of her retirement right there. So,
oh my gosh.
It's been kind of crazy. It's been a good week. I mean, I'm obviously working on this project and I should say case. And what I'm trying to design is a way, number one, so she can recoup some of the money that she lost in the divorce.
Right.
And so I have products out there that give out, one has a really good juicy bonus of about 27%.
Hey.
It's a longer term type of annuity. I don't traditionally go that long, but she's not going to mess with this money for years. She's still working, so it may make sense, right? So it may make sense to put her in this kind of a product where she gets 27% bonus. All the other ones are like 20%, 13%, 14%, et cetera. Premium bonus. This goes right to your accumulation value. You get credited right now. Then eventually, we have to start to consider, and I told her yesterday, we have to start to consider if you do make this kind of money in 10, 15 years, whatever it is, now you're going to be pushing up against the RMD type scenarios that you will have to start taking money out.
This is so juicy, such good information. I want to give your number out here in the middle of this, Todd, because 888-548-0409, Long Financial Services, you're listening to Tod Long, 888-548-0409. And if you want your financial fast track review, just call and book into his calendar, because this is very interesting information. In other words, this person, whether, we could call her, or whether it was a man, whoever, their 401k was at risk.
Yeah.
Right?
Absolutely. It's been at risk for, the 7 years or so, especially if you're not paying attention to it. Now, if she was aware, looking at it on a consistent basis, which I do have clients that do, she wasn't. She was busy doing her thing, busy living, right? Raising kids and doing what she was doing, getting over divorce, all those kinds of things. She's not looking at.
Right.
Well, I think one of the things she said is like, I don't want to look at it now because I had to give out 50% of it.
That hurts, man. that right
hurt.
There.
Yeah, that hurt. So I'm sure she was probably going through some emotional turmoil with that. So she chose not to, and she probably just forgot about it. As a matter of fact, she told me I had problems logging in because I didn't know the passwords anymore and all that kind of stuff. So all that kind of thing.
It was ghosted 401k in addition to it just sitting there being at risk. And money is so emotional, Todd. I get her story 100%.
Yeah, it was definitely emotional for her. But I think I can help her out, right? It's put her in a good situation, try to recoup some of the money that she lost in the divorce. Not all of it, obviously, but some of it. But then also put her into some index type of products that are really, juicy. I'm kind of shocked that some of the stuff that I'm looking at now, that if we do this correctly, then she could, earn in 10, 15 years up to, $4 million, $7 million, really depends on where it's at. It's a good position to be in for right now.
What does indexed mean before we round out this segment? What does that mean, indexed?
Sure. So these index products, number one, they're not variable, so it's not in the market right now. Her money is in the market, so it goes up and down and left and right like the market does. An index product is just going to look at an index, like an S&P 500. These are NASDAQs that I'm looking at. Dow Jones, Barclays, there's all kind of different index out there that an insurance company will look at to determine how much credit to give an account. So if she puts in $1 million and the market is doing great, 20%, 25%, et cetera, if I get her in the right kind of index, I can do what's called a participation rate in that. So I can participate in the growth of that market or that index. If it's, if it goes up 20% and I got 100% participation rate, then I'm getting 20% added to my, that's, if it's got $1 million, there's $200,000 getting added to the account, right?
But it won't go down.
It will never go down. There's zero risk at all. So it's only gains on these indexes.
I'm excited about this, and I can't wait to talk more about it. Is this a good time to kind of put a nice red bow on this segment?
Yeah, absolutely. So if you are listening, a lot of our listeners, as a matter of fact, probably have old 401ks, old 403bs, any kind of qualified accounts that are out there that are just sitting that may have stalled. Give me a call. This is a great time to actually have a financial fast track review. And for the next 10 callers, we're going to offer a no cost, no obligation financial review. This analysis will include a fee report and risk assessment to help you recognize unnecessary losses in your portfolio and see if by simply protecting your retirement investment and minimizing, or in her case, eliminating fees, you could actually experience dramatic growth potential. Second, we'll perform a tax analysis to reveal how you could possibly reduce your taxes and increase your cash flow. And finally, we'll develop a customized income plan utilizing proven strategies that could actually strengthen your retirement income and take the worry out of living in retirement. So in short, what we're going to do is take the guesswork out of financial planning for you. So for the next 10 callers, that's a comprehensive financial fast track review that we are providing complimentary with no obligation to you. So Jackie, tell the listeners how to get in contact with us.
Sure. Use this number, 888-548-0409. It's an easy 888 number, so 888-548-0409. Or check out Todd at longfsg.com, longfsg.com. Be right back.
Tired of financial jargon that leaves you feeling confused? At Long Financial Services, Tod Long offers clear, straightforward advice about your retirement. Understand your strategies, regain control, and get peace of mind knowing exactly where you stand. Call 888-548-0409. Again, that's 888-548-0409.
So glad to have you listening to our show. We're kind of in this is our fourth week. It's our fourth or fifth show, Tod Long.
Yeah, it's been good. Yeah.
I think so too, and I'm so glad people are calling you. Long Financial Services is Tod Long's firm, and he's reachable on his 888 number, 888-548-0409, right here in OKC. He is an OU Sooner, if you didn't know that, from the track department. Mm-hmm. It was a little while ago, though, but that's okay.
Yeah.
Do they have a plaque up next to the running track with your little, do they need to have a bronze statue of you?
No, there's Heisman Row down in OU, and that's a football school, so that's their primary big sport. But in the indoor facility over at OU, they have how they honor us. Well, actually, national champions, which I never was, they do get a plaque on the wall, but all Americans get we're in banners on the wall, and so because I was there in the '90s, early '90s,
right?
And I probably mentioned that I was one of the more decorated athletes there as far as All American certificates, Big 8 championships,
six times.
Yeah, exactly, and. So my picture is on the wall, along with all the accolades that I have.
Oh, that's neat.
Same thing with, it's in a banner though, so there's multiple people in it.
Oh, that's fine.
So I was in the 90s, and there's some in the 60s. Like my dad and uncle are on a banner as well.
From the 60s.
Yeah, from the 60s, yeah, because that's kind of the era that they were in. People from the 70s, people from the 80s, et cetera. So it's pretty cool how they kind of honor those athletes, especially when they don't have, OU does not have a Hall of Fame, which is very odd. I don't know why they don't have an athletic Hall of Fame, but they don't. And so I would hope that I would put in enough work to where I could be a part of that if they were to get it. But
can't we get it going over there?
Yeah, I don't know. You know what? It's my dad and uncle are not in the Oklahoma Athletic Hall of Fame, and they should be.
We got to change that.
Yeah, they definitely should be in that. I mean, I'll do whatever is necessary for that to happen, because I think that's I couldn't go anywhere without knowing. Well, whose kid are you? I was like, what are you talking about? It's like, no, is it Glenn Long or is it Wayne Long? You know, that kind of thing. That's everywhere I went. So
Is that right?
that's fame, right?
Yes.
That should be in Hall of Fame.
You really should. Maybe they're just waiting for a donation from Long Financial Services.
Something. I don't know. I mean,
Going.
others are in that Hall of Fame. I don't see why. I mean, of course, Jim Thorpe is.
Oh, of course.
Yeah, of course. And there's lots of others, but yeah, I think my dad and uncle should be in it for sure.
I think so too. How delightful it is that you have that kind of a background. And exactly that kind of a background has brought you to the discipline and resilience and focus that you put into your financial clients. And it's funny, you and I talk about this all the time, or we did when we first started working together, that you have a really high blood pressure and heart rate, right? Because of naturally.
Naturally. Yeah.
And so that's why you're kind of tenacious when you study a case for a client, right? You're on it until it's done.
I dive in and I make it happen. And I make sure that I have uncovered any opportunity for my clients to make a positive impact. And that's what I try to do, especially with, I'm probably going to take this from you, especially when you're talking about some of these new changes that are coming up with the 401ks, right?
Good.
Because people that are over 50 years old trying to do their catch up contributions. If you're like high net worth individuals, you got to have $145,000 above. Similar to what we just talked about with this other client, she was in that space, and she is making those
Catch-ups?
Those catch ups.
Okay.
And so that's part of the thing we talked about is like, well, now that this change is going to happen in 2026, actually December 31st, 2025 is the last of it. January 1st, 2026. If you don't have access to a Roth 401k or Roth, account, you can't make those catch ups.
Whoa! So are you counting on the employer to have that?
Yes, a lot of people are counting on that, but the issue is, guess what? A lot of 401ks don't offer Roth 401ks, so it's really just a traditional 401k, and that's it. It's all pre-tax dollars, and so if you don't have access to a Roth 401k or some sort of Roth account, then you can't do these makeup contributions. I mean, you're out. And if you're rating for employees or the IRS, et cetera, to figure it out, they're not going to figure it out. They're not going to figure it out before January 1st, right?
No.
Yeah. At all.
No, that I can see those accountants over there on Capitol Hill just going bananas right now because of the OOBYU or whatever it's called. The act,
OBBA. Yeah, exactly. The one big beautiful bill act. Yeah, there's a lot of changes coming with that, and these catch ups cannot be allowed if your plan doesn't actually allow any kind of Roth contributions, which is major. And if people, again, I'm going back to this client we just talked about.
Please,
if she did not look at her 401k, if you don't look at your 401k, and you could be in a situation where, oops, I don't have access to these Roth contributions anymore. So you have to look. You have to, at least if it's not to me, like, a financial professional, then start asking questions, because this is happening, and you got 2 months left, roughly 2.5 months left. That's it.
Here's Todd's number, because I don't want to look at it. I'm going to pass this off to you. 888-548-0409, 888-548-0409 to call Long Financial Services and get your financial fast track review from Tod Long. This is very interesting. So in the case where you have an orphan 401k like she did from her old job, which was this, I feel like it's a really good amount of money. It did not make that much money, but it was still orphan because she's not employed by them anymore.
Correct.
Now, how does that work with, what about her new employer? Can she do catch-up contributions if her new employer doesn't have a Roth option?
Yeah, so we're in the process, because again, I just got this client here recently. And so we're in the process of actually going down the path with her existing 401k to determine if they allow Roth contributions or catch-ups, right?
Right. Okay.
And if not, then again, I have options. We can do post-tax, contributions to a Roth or other kinds of post-tax contributions to some sort of retirement account that where she can benefit somewhat. It's not the same as a Roth 401k, but it's the same it's the same tax status. It's the same probably account that's going to be going into, et cetera. It's just not called a quote unquote Roth 401k.
Okay. Now, in retirement, Tod Long, I'm dying to know, what is the best money to have when you actually say, I'm now retired? What's the best money to have?
Well, that's a hard question to actually answer.
It just depends.
Well, yeah, totally. It totally depends, right? Because you and I've probably said this before, but you have to have three different buckets. Well, most Americans have three different buckets. You have Social Security, you have some sort of investment account, and some sort of pension. Investment accounts are probably going to be 401ks, 403bs, et cetera, some kind of qualified account. Pensions are kind of a iffy subject because there's not a lot of companies that do pensions anymore. Right. I think they kind of phased out quite a long time ago. There are some that still actually have it. When you have it, they're great. Although I have some clients that have very, very small pensions. When I'm talking about $400 a month, that kind of thing. Although that's buying some groceries.
You better believe it.
Yeah, I'm putting that into the income plan. But it's really dependent upon all the different options that are out there that you have income wise, and that's one of the first things we talk about when we talk about my plans. Is what's your income sources? Is it pension? Is it Social Security? Is it your 401k, 403b qualified account, et cetera? Is it an investment account? Those kind of things, or do you have something in a money market account, like liquid cash? Are you using that? Because I have a client that I rolled over, maybe 1.4 or something like that $1 million a few months ago, and he's living on $500,000 in his bank. That's all he's doing. I'm like, okay, you don't have a lot of expenses. He doesn't, but that's going to get him to the point to where he can start taking these RMDs in a few years, and he's going to be set and take your Social Security. I think he didn't take Social Security yet either. So yeah, he's set on his money market account. So
because his RMDs are not going to be subject to the tax if they were in an IRA, right?
No. If it's a traditional IRA or 401k or anything qualified can be it can be a Roth, but that's post-tax, but it can be a traditional IRA. It could be a simple account. It could be a 401k, 403b, et cetera, 457. All those are qualified monies, which means that all of those are going to be subject to RMD if you don't do something with them prior to.
Qualified to be taxed. Is that what that means? Qualified?
Yeah. Well, yes. You could firm it up as that. I think it's something different, but I don't know the definition at this point. But all I know is like if it's qualified money, you hadn't paid tax on it yet.
And you're gonna.
Either you can do it now systematically doing rollovers or whatever, or you can be forced to take it at 73.
Golly, this just is rolling right along here today. I know that we're going to talk just a little bit more on this subject matter, and I want to hit Social Security too. But look how fast that went.
Yeah, we these subjects are good, and if you are 50 years old or older and earning above $145,000, this change could actually have a major impact on your retirement tax strategy, but only if you ignore it. That's why we created this financial fast track review. For the next 10 callers, we're offering a no-cost, no-obligation session to help you understand how these new catch-up rules and future tax rate changes could affect you. This analysis will include a fee report and risk assessment to help you recognize unnecessary losses in your portfolio and see if by simply protecting your retirement investment and minimizing or eliminating fees, you could actually experience dramatic growth potential. Second, we'll perform a tax analysis to reveal how you could possibly reduce your taxes and increase your cash flow. And finally, we'll develop a customized income plan utilizing proven strategies that could strengthen your retirement income and take the worry out of living in retirement. So in short, we're going to take the guesswork out of retirement planning for you. So for the next 10 callers, that's a comprehensive financial fast track review, free of charge. Jackie, tell the listeners how they can grab one of these spots.
Do this. Get right on into Todd's schedule with the 888 number we have set up for this radio show. 888-548-0409. 888-548-0409. And we'll be right back on Financial Fast Track with Tod Long.
Feeling like just another number with your advisor? At Long Financial Services, you're always valued personally. Tod Long knows your retirement isn't about numbers on a page. It's about income you can depend on, security you can trust, and advice tailored specifically to you. Take the first step toward a meaningful conversation. Call 888-548-0409. Proudly serving Oklahoma. Again, that's 888-548-0409.
Hey, welcome back to the show. We're so glad to have you listening to it. Long Financial Services is Tod Long and his team. And the show is Financial Fast Track with Tod Long. How important is it if you leave your employer, Tod, to transfer your old 401ks into something new, like an IRA? Is that important to do?
Yeah, it is, especially if you don't plan on paying attention to the old 401k. And that's what a lot of folks tend to do. It's like you've moved to a new company.
Yeah.
And now you're going to set up a new 401k. If that's a good 401k, right, at the new company, then a simple method is to just roll over the old 401k into a new one. But a lot of people, they get busy with the new job, et cetera, and they don't do anything about it. Then a year later, like again earlier, it's a year later. She hadn't worked there for a long period of time, and she forgot she couldn't get into the password, or into the account because she forgot passwords, email addresses had changed, et cetera, et cetera. So it's important to keep hold of that, especially if it's sizable amounts of money. Either move it into the new job or find a better home for it. Find something that's going to be more competitive, more zero risk, that just generates pretty good cash for you while you're focused on your new job.
Is it okay to just leave it in there until you retire and just start taking distributions from that old thing?
You can. There's as a matter of fact, I have a client that is 56 years old, and there's what's called the rule of 55. And what that means is if you leave your 401k at your last old employer, you got fired, you left, retired, whatever it may be, and you're not 59 and a half, which is from IRS perspective, is you can retire at that point.
I see.
Which means that you can touch qualified money. You can do something with it at that point. Before that, you'll get penalized 10%. So, but if you leave the 401k at the old employer, Rule of 55 allows you to take withdrawals out of that 401k prior to 59 and a half years old, provided you pay your income tax on it, et cetera. It's beneficial in some instances to leave that money there. But a lot of companies, well, this particular company didn't for that the client we talked about, but there's a lot of companies that will force you to move the money because they're custodian. You don't work for them anymore, and there's fees associated with it, and they don't want to pay those fees for somebody who doesn't work there anymore. So it'll force you to take that out. Usually it's within 6 months to a year you can start to move it before they start either not penalizing, they charge you fees, erroneous fees, mind you. It's not like 1.25%, it's a little bit more than that, and so that's just doesn't make a lot of sense. So it's usually just an easier method, just to either roll it over into your existing new 401k or roll it into a traditional IRA.
Is it okay if we cash it in, that old 401k, cash it in and buy some sort of leveraged fund, or put it somewhere where it's more cash available? I mean,
you can do that. However, depending upon your age, that may not make a lot of sense. Again, if you're under 59 and a half, you won't be able to touch it because you'll get 10% penalty. You can do it,
right,
and you'll get penalized, you'll get your taxes taken out, et cetera, et cetera. That's just too much money. If you're above 59 and a half years old, you have the options of cashing it out if you choose to. You'll have to pay the taxes on it, of course, because you haven't paid tax on it yet. But the simpler method, if you need it, then we can work on options for that. Okay. But if you don't necessarily need it, then there's the Roth conversions. There's just putting in a traditional IRA, leaving it there, letting it earn 10, 12%, whatever it may be, not touching it, and start to worry about it a little bit later on. Again, depending upon your age. If you're 70 plus, I wouldn't suggest this because we have RMDs to talk about, right? But if you're 59 and a half, 60 years old, we probably have some options to do something with.
Call Tod Long, 888-548-0409, 888-548-0409. Let's get that money working.
Retirement means a new phase of life, and managing risk is crucial. At Long Financial Services, Tod Long and his team build comprehensive strategies designed to minimize risk, generate reliable income, and help you stay proactive through every market condition. Discover what your retirement plan could look like. Call 888-548-0409. Again, that's 888-548-0409.
Social Security, it seems like it's far away until it's right there and it's time to claim.
Mm-hmm.
Yeah, and we don't want to claim just as early as possible unless, well, Tod Long has the finer points. Welcome back to the show, Financial Fast Track with Tod Long. And I know that you're super experienced at this Social Security thing. You conduct education seminars and workshops for people who have no one to talk to about this. You want someone on your side when it comes to your Social Security. Don't listen to Marv over the fence while you're watering your roses.
Right. That's a great point. Yeah, that makes me laugh. But because a lot of people think of their financial, they get their financial recommendations just like that. Well, my neighbor does X or whatever it may be, but I do host these Social Security seminars because for most Americans, Social Security is actually their largest source of retirement income. It's bigger than their investment incomes. It's more than qualified plans like 401ks and IRAs, et cetera. But even though it's the foundation of retirement income, most people treat it like it's kind of a guessing game. Well, should I do 62? Should I do 63, 65, 67? All these numbers are out there. So there are over 1,550 different ways to file for Social Security. I'm sure nobody knew that.
Strategies, huh?
Exactly. You only get one chance to get it right, though. So in these seminars, what I do is I help folks, pinpoint their ideal filing strategy, see how Social Security actually fits within their overall income plan, and uncover potential income gaps that could actually impact their lifestyle later on. So what we do is we integrate Social Security correctly. That's the timing, the taxation, the survivor benefits, because if somebody passes away, what do you do, right? So all this can add tens of thousands of dollars to lifetime income. So if you get it wrong, it's impossible to undo. So with these new 2026 changes that are coming up that we're going to talk about, from wage-based increases to COLA adjustments and taxation pressure, it's more important than ever to actually understand how Social Security interacts with the rest of your financial plan.
Mm-hmm. And you can get one of these reviews for yourself if you want to sit down with Todd one-on-one, or the two of you go to see Todd, 888-548-0409. You certainly don't need to wait until the seminar time. You can get this personally and right across the table from one another, or having some coffee, 888-548-0409, and determine how this does fit into your overall investment strategy or your overall retirement plan with your distribution, right? The distribution phase of your retirement?
Yep, absolutely. That's exactly it. This is exactly the distribution stage because it fits solely into the distribution portion, because all you're doing is getting money at this point. One of the changes, actually one of the top line changes of this new Social Security change, is the Social Security taxable wage base. That amount of income subject to Social Security tax that you pay is expected to actually jump up to around $183,000, actually $183,600,000 in 2026. So for high earners, that means a bigger tax bill, since you'll pay Social Security tax on a portion of your income or paycheck longer. For couples still working, we need to actually make sure that those extra FICA taxes fit into their overall tax strategy. Sometimes it makes sense to actually redirect some other income, say a bonus or deferred income, et cetera, deferred comp, so you can actually stay tax efficient during this time period.
Mm-hmm. Because that does happen in these years of our late 50s and early 60s. We could be getting a bonus or an exit strategy bulk of money, right?
Right.
A distribution, if you will, from the employer, or you might be inheriting some money, and this could really goof things up.
It absolutely could. Absolutely.
So best thing to just get in there and talk to Todd about the whole darn thing. Can I talk to you real quick, ask you the follow-up question? Why not just claim it at 62 years old?
Well, it really depends on how, if you're still working, right, at 62, you can do, you can file at 62 if you'd like to, and you can still work. But there's a earnings test that's going to have to happen. And that earnings test is going to determine how much of your Social Security check is going to be withheld because you're working. The only time you can actually work and get full Social Security is at full retirement age. And that depends on when you was born, like the year. For me, I'm 1970, so mine's 67. For others earlier than that, it's going to be 66 and some change, 66 6 months, 66 3 months, et cetera. That's your full retirement age. At that point in time is when you can actually fully work, make $100,000 a year if you want to, and get full benefits from Social Security. Anytime prior to that, you can either run into for every $2, $1 is going to be held back if you're over a threshold. And now what those thresholds are is like 25,000, actually 25,000 and some change for 2025. So it's not a lot of money you can make before you'll start to impact your Social Security. So You can file at 62 for sure, but you can expect a reduction in your benefits from Social Security if you do that.
Well, that's no fun. Oh, my golly. All right. So that's, again, why you want to talk to Tod. But it's tricky. There's many strategies. 888-548-0409. Talk to Tod because he teaches this stuff, and he's an education expert on this subject. 888-548-0409. What about these COLA adjustments? They give us little bumps up in pay, if you will. But
yeah. So the cost of
great.
living, the cost of living adjustment, the COLA, they're expected to rise to about 2 to 3%. But here's the kicker: most retirees won't really feel that because the Medicare Part B and D premiums usually rise alongside the COLA adjustments. So your gross benefit might go up, but your net deposit stays flat or even drops. So I tell clients all the time, stop looking at your gross benefit. Look at your net after Medicare. That's the number that actually drives your real retirement income. So a lot of people, again, that, listeners at this point, if you're 65 plus taking Medicare, they're not going to feel it, but they're going to see that their
it
income
goes
drops.
down.
Yeah.
Do you have someone in your office or someone close to you can
As a matter of fact,
for Medicare?
Yeah, because I'm in the space of Social Security. So it's not in my agency. It's actually a partner that actually sets me up with all these seminars.
Yeah, great.
Yeah.
I just wanted to know because it can get really tricky, but you can call Tod and ask for that person's number and sit down with a professional. Again, this is not something you want to enter into willy-nilly. And
Right.
the two of them kind of go together.
Right. They do, as well as those folks that are and we probably will talk about it in a second, but the bridge medical accounts, like your healthcare accounts, a lot of people let's say they want to retire at 62, you don't get Medicare until 65 years old. What do you do for healthcare? A lot, you can do COBRA, you can do some things like that that are very expensive, or you can go to the market and try to find a good policy. Now we do that in our agency is to try to find good healthcare.
Oh, good.
Either bridge accounts or just major accounts that, somebody who's, self-employed needs some health care for 3 or 4 different employees. We can set that stuff up as well.
Oh, good. Okay.
But yeah. But anyway, so yeah, we do a lot of other things outside of just fully retirement planning stuff, financial planning.
Very good. I'm noticing how many things that we've been on the air together for 4 weeks, and I'm learning more and more about what you offer there at Long Financial Services, reachable on his 888 number, 888-548-0409, 888-548-0409. You could also look Tod up on his website if you want to, longfsg.com. That's longfsg.com. I guess all your services are listed there as well.
Yeah, they are.
Very good to know. What about this big, beautiful bill? Is this going to impact our Social Security?
Well, here's some of the confusion. So despite rumors, the OBBA did not repeal taxation on Social Security benefits. So up to 85% benefits can still be taxable depending upon income, but we can control how much is taxed actually based on income timing. So for example, doing a Roth conversion early in retirement before claiming Social Security can actually keep later benefits in a lower taxable zone later on down the line. So we're helping clients currently model those what if types of scenarios so they're actually not surprised come tax time to try to help alleviate any kind of surprises that may pop up.
Income timing. Who knew?
Yeah.
I mean, that's a lot of moving parts that you really don't want to try to navigate on your own because most of us have spent a career 40 years, 30 years doing one profession. We don't want to then in retirement have to become a financial expert.
Exactly. That's why there are financial experts out here like myself.
You bet.
Who can help you out through those kind of things because you don't want to have to do all that on your own. Because again, going back to that 1,500 different ways to actually file for Social Security.
Crazy.
Once I learned that little thing, I'm like, goodness gracious. So what are you supposed to do? That's why you're looking at, the neighbors. Well, what'd you do? Well, at 63, I did something. Well, I'm gonna do it too. But then they put themselves in a situation that may not be beneficial because their neighbor is completely different experience than them. So it's got to be very unique and it's got to be customized.
Mm-hmm. And one of those customizations I feel could be true is health. Somebody's overall health, right? A client's health.
Yeah.
This can play into your discussion with them.
Yes, it does. One of the things that I do talk about when I do these seminars, because we give away a free report afterwards. And when I ask them questions, I ask them, what is your life expectancy? And so for you, it may be 85, 88. For Jim next door, it may be 95 because that's what his family does. Or it could be a situation where, well, I have great family, genealogy, but I had cancer and it may come back, or whatever it may be. So those
Right.
lots of different kinds of scenarios that could happen that you have to talk to someone about to make sure you actually pinpoint the right way to file your Social Security and or even set up your set up retirement plans in general. So with all these changes, coming for Social Security changes like the waste-based adjustments, the COLA shifts, taxation issues, et cetera, it's more important than ever to actually make every claim correct. And that's what that fits into your larger retirement plan. That's why we've actually created the Financial Fast Track Review. So for the next 10 callers, we're going to offer a no cost, no obligation session designed to help you optimize your Social Security benefits and strengthen your overall retirement strategy. This analysis will begin with a Social Security review. The same comprehensive approach we actually use in our seminar clients will help you pinpoint your ideal claiming age, evaluate spousal and survivor strategies, and show you how to integrate Social Security with your other income sources to maximize what you keep, not just what you earn. Next, we'll provide a fee report and risk assessment to help you identify unnecessary losses in your portfolio and see if by simply protecting your retirement investments and minimizing or even eliminating fees, you could experience dramatic growth potential. We'll also perform a tax analysis to reveal how you could possibly reduce your taxes and increase your cash flow, especially as new tax laws take effect. And finally, we'll develop a customized income plan utilizing proven strategies that could strengthen your retirement income and take the worry out of living in retirement. Because when you understand your plan, you can stop worrying about what's next and start enjoying your retirement that you've actually worked for. Jackie, tell the listeners how you can grab one of these sessions.
Take advantage of that offer, 888-548-0409, 888-548-0409. You don't want to pin the tail on the donkey with your Social Security claiming strategy.
That's a good analogy.
Isn't it still you're walking, well, where is that thing?
Exactly. And you're blind doing it, right?
Blind.
Yeah, and that's what it is. Yeah.
888-548-0409.
Is your retirement plan starting to feel generic? You're unique. Your retirement strategy should be too. At Long Financial Services, Tod Long customizes each plan specifically around you, your life, and your goals. For a personalized review of your retirement, call 888-548-0409. Proudly serving Oklahoma. Again, that's 888-548-0409.
Of course, retirement isn't just about income, but mostly, it's about unexpected costs. And aging, of course. Retirement kind of goes hand in hand with aging. We think about, I don't know, Todd, sometimes I feel like when I was younger, I thought about retired people as, guys wearing shorts and the black socks that, they pull up in their hard shoes. And, because it was awkward. People went from from being in business or, working very hard their whole lives to, okay, now I don't work, but I'm still going to wear my hard shoes. I don't know.
Yeah, that's a good image. I know those images.
But now, guys are, making a slower guys and women, a slower transition, I feel like, into those retirement years. And with the baby booms, of the peak 65, we still have 12,000 people a day filing for Medicare, hitting 65 years old, the end of baby boomers. And so it's retirement your way, if you will, isn't it? It's a new era.
It is. There's a lot of different ways to, I guess, identify as being retired. Because a lot of folks don't do it the traditional way.
I like this.
They do it in a way that suits them. So some people, I have clients, as a matter of fact, it's like, you know what, I'm going to consult, one day a week.
Sure.
Okay. That's retirement for him. Or I'm sure that, I'll have other folks that I want to open up. As a matter of fact, this is a real client. I want to open up a daycare. I'm like, you want to do that in retirement? That's her calling. I think we talked about this a couple of weeks ago. You have a calling, and so I think she was in education or whatever it may be, and she loved to be around children or whatever.
Aww.
And her calling is to be around young folk and to mold them and scold them, etc. So she opened up a small daycare that she does, and so that's what her retirement is. And I'm like, okay, that's your retirement. My retirement's not gonna be that.
Yeah, no, on the kids.
Yeah, no, on the kids.
It's that pitch that they make, that high pitch when they're about 2 to 6 years old.
Yeah.
I can't do it.
Yeah,
My nerves
I've been
are
there,
fried.
done that a couple of times. I'm good.
I'm good. Yes.
Yeah.
Well, I have a couple scenarios here for our last segment of the show, if you will, because people do have questions, and this is coming on the tails of us talking about your 401k client that had this big 401k and she didn't look at it for so many years. If anybody wants to hear the show again, we do post it in podcast form, the Financial Fast Track, anywhere that you do get your podcast. But you're talking about your client who left this 401k alone and unguarded. It kind of had some fees and so on and so forth. So this is coming in the form of a question, what is the first thing you would do if somebody has a ghosted 401k that they ghosted? What's the next course of action if they come to meet with you?
Honestly, the very first question is, what do they want to do with the account? Can you log into it? I guess that would be the first one. Can you log into it?
Can you log into it?
Yeah.
Good.
And so as a matter of fact, she couldn't. So it took a couple of days to get that information. But after that is once you get access to it is really, let's evaluate what has happened, what has been going on with it. Let's look at the fees. Let's look at the allocations on it. And then from there, it determines, we determine where do you want it to go. If it's doing well and you can leave it there, if the custodian will allow it, then leave it there. If it's not, in her case, it wasn't doing well. So let's look at options to do something different. We can roll it into her existing 401k that she has at her new job, or we can look at other options that has bonuses on it, 20%, 27%, in some cases 40%, et cetera, bonus on top of the money you rolled in, premium bonuses, and then have it in some sort of indexed account like we talked about that's good, that'll earn 10, 12, 13, sometimes 14%. So it really depends on what they want to do. We have to do a suitability study to make sure that when they do this.
Yeah, suitability. That's the word I was looking for.
Yeah, absolutely. Yeah, we just got to make sure whatever we do, it's suitable for them and what their goals are.
Right. If it suits their needs and their family's needs, that's very good. Listen, you can call and talk to Todd about this and say, hey, can you help me log into this dang old 401k? 888-548-0409, 888-548-0409. I had a small one that was just hanging out, and finally I got a letter from like a clearinghouse IRA company.
Yep.
And they're like, we have it now. If you ever want it, here's our number.
Exactly.
So that can happen. But
that can happen as well.
Sure, but just depends on what you want to do with that money, how much is in there, and what point you are in your financial plan for retirement. 888-548-0409 to reach Long Financial Services with Tod Long. All right, here's someone 64. They're considering retiring, but they're not sure how to bridge the health care coverage until Medicare at 65. So literally, what do you talk to people about so it doesn't drain off whatever fun money they have planned?
Exactly. I see this one all the time. Somebody is, 63, 64, thinking they're set, didn't realize, well, Medicare doesn't start until 65. What am I do? Don't have a job. So the gap is going to cost me $15,000 to $20,000 a year in premium if they're not prepared.
Right.
And so for clients in that window, we look at several different options. I probably mentioned it earlier. We look at COBRA for short-term coverage, though this is usually the most expensive one to do. Marketplace plans with income-based subsidies. If your income is under a certain amount, a certain threshold, then your premiums can actually drop dramatically with this, or even a part-time work with benefits as a bridge strategy. And this is a lot of what my clients do. Oh. They want to retire at 63, 64. They do, but then what they do is they pick up a consulting gig for like maybe 1 or 2 days, not for the paycheck, but for the insurance. And that move saves them usually $1,000, $1,500 a month.
That's really a fun idea. Or go serve coffee. They have benefits over at the coffee place.
Absolutely. Yeah, there's lots of ways to get it and bridge that gap until 65 if you want to retire at 62 or whatever. And you have the income to be able to support you in other ways, mortgage, housing, whatever it may be. But insurance, health insurance is a major part of should be a major part at least of your retirement plan. So in some cases, if you're above or younger than 65, go out and get a little part-time job, make it happen.
Because for most people, middle class people, right, this is the delineation between being able to retire and not now because
absolutely.
of the healthcare costs are so high in this country.
They absolutely are. Absolutely. That's why it's critical to actually have that part of your retirement plan. Healthcare.
Yeah, but just go one day without health insurance and see how it can ruin your life. Really.
Absolutely.
888-548-0409. Todd can help you out with this, 888-548-0409. All right, how about this? Just hit with a high dental bill of $5,000 and realize Medicare doesn't cover much of it. So what are some overlooked healthcare costs retirees need to plan for?
Yeah, this is another probably major one for folks who are on Medicare. Is out-of-pocket healthcare expenses that Medicare doesn't cover. Dental, vision, hearing aids, long-term care, all those can add up fast. And so I had a client that was shocked. They had actually $5,000 dental bill and said, "Hey, I thought Medicare covered this." I said, "No, it doesn't. It doesn't cover that kind of thing." So what we did is built a what I call is actually a healthcare cushion. So usually about 10 to 15% of their annual income set aside for uncovered medical costs. So if you're healthy, you may feel like, this is unnecessary to do, but until you need it, it's important, right? So just like for me, and I'm using a track and field analogy. So if you're running 110 hurdles, which is, all the hurdles in the straightaway, it's usually not the first hurdle that actually trips you up. It's usually the 7th or 8th when you're right close to the finish line. That's the one that gets you. The same exact thing when retiring. It's not going to be the first thing that gets you. It's going to be the things that you're 75, 80 years old. Oh my God, I got to get hip replacement. I got to need a knee replacement, whatever. That you were perfectly healthy prior to that. Those are the things that got to trip you up. So you have to have some sort of plan for it.
You bet. And you can talk to people, maybe even some gap insurance of some variety.
Yeah, that's what the insurance from the marketplace can actually help you with that, as well as, you probably Medicare and Advantage plans and things like that we can actually do to subsidize some of these kinds of issues. And
maybe the money left over from your health savings account.
HSAs will work too. If you are still working, you can have access to that. And then if you aren't, if it's sizable enough, you can make those things happen for those out-of-pocket expenses, health care expenses.
Okay. Good to talk to a professional. 888-548-0409. 888-548-0409. So essentially, the bulk of what you're talking about, or what we've been talking about on the show today, your Social Security, your 401k, the new rules that are coming down for 401k, because the Secure Act 2.0, finally some of these rules are going to be enacted.
Right.
And so it's not just business as usual with our financial retirement money.
It's not. You a lot of people are probably going to be caught off guard with the changes that are coming, especially if you're not paying attention. And most folks honestly don't pay attention to their 401ks or retirement accounts because they just are, and we talked about this before, right. They've been just conditioned to save, and that's it. Once you start to phase into or get into the retirement discussion, 60, 61, what am I supposed to do? Then you start to realize, wow, I probably should have did something, 2-3 years ago that I'm trying to do now. And now the impact, if I make that change, it's not going to be that impactful. So it's really important. And for anybody that's actually listening is to start to look at those things now, talk to somebody like myself, not your neighbor, not the person cutting the yard or whatever it may be. Talk to a financial professional about these issues. Mm-hmm. That way you don't be caught off guard.
Mm-hmm, sure. And certainly there's some review for your current clients. You have a few reviews a year if necessary?
Yeah, I do typically a quarterly review, and it's not so much to sell anything or anything like that. It's really just to make sure that nothing's changed in their portfolio or changed in their life. Yeah, that could impact the plan. And so we want to make sure that those things are actually taken care of. So making sure you actually have an income plan that can weather the unexpected. That's healthcare costs, housing transitions, longevity, et cetera. That's what drives us here at Long Financial Services. It's what we're good at, and it's what we do day in and day out. Because retirement isn't just about building income. It's about protecting that income from the surprises life's going to throw at you. And that's why we've actually created the Financial Fast Track Review. For the next 10 callers, we're going to offer a no-cost, no-obligation financial review designed to help you uncover and prepare for the hidden costs of retirement before they become a problem. This analysis will include a fee report and risk assessment to help you recognize unnecessary losses in your portfolio and see if by simply protecting your retirement investment and minimizing or even eliminating fees, you could actually experience dramatic growth potential. Second, we'll perform a tax analysis to reveal how you could possibly reduce your taxes and increase your cash flow, especially when healthcare and living expenses start to rise. And finally, we'll develop a customized plan utilizing proven strategies that could strengthen your retirement income, help you cover future health needs, and give you a clear path for life's next chapter. We'll turn the uncertainty into direction so you can actually approach retirement with confidence instead of concern. So Jackie, tell the folks how to get in contact with us.
Sure. This is the number to use. It's 888-548-0409. That's how to get in touch with Tod Long at Long Financial Services. It's an easy phone call, and you bounce right onto his schedule for a first meet and greet, no cost. 888-548-0409. Todd, great show this week.
Thank you. It was a great show. I appreciate you you helping me out through this.
Investment advisory services offered through Tod Long, a registered investment advisor. During this show, Tod Long provides general information, not individually targeted personalized advice, and is not liable for the usage of information discussed. Exposure to ideas and products or services should not be considered investment advice or a recommendation to buy or sell any of these financial vehicles. This information should also not be considered tax or legal advice. Individuals should consult with a professional specializing in the fields of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Past performance is not a guarantee of future results. Investments will fluctuate, and when redeemed, may be worth more or less than when originally invested. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to securities or investment advisory services. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are offered through Tod Long. By contacting Tod Long, you may be provided information regarding the purchase of insurance products.